Do we have an inheritance tax in Canada? The answer is kind of, but not really. I recently had a question from a viewer who has a home. They own their home jointly with their spouse, and they have one child that they would like to have inherit that house when they pass away. And they'd heard from friends and colleagues that they might be subject to inheritance taxes, and this gave them a lot of discomfort, and they wondered if there's anything that they could do to avoid this inheritance tax. We don't have inheritance taxes in Canada. We do have capital gains taxes, and we do have a process called probate that can apply to some assets when somebody passes away. So in this video, I'm going to talk about the probate process, how it works in the event of somebody passing away who owns a home that wants their child to inherit that property, what the difference is between probate and capital gains taxes and other forms of tax that might be payable when someone passes away. And hopefully some of this will relieve any concerns you might have about inheritance taxes and maybe help you make planning mistakes as you try to avoid this inheritance tax that doesn't exist. And if we haven't met yet, my name is Mark Walhout, and I created this channel to share ideas and concepts that I'm using to help people with retirement and financial planning topics. If you want to get more videos like these, consider subscribing to the channel and hit the bell icon so that you're alerted when new videos are posted. So let's talk about the question of inheritance taxes. So inheritance taxes don't exist in Canada. We do have a process called probate. These concepts are often confused. To put this question into context, I'm going to use a simple example. We'll picture a married retired couple. They own a home that's worth $1 million in the province of Ontario. And for the sake of simplicity, for example, we'll assume that they have no other assets. They have no other RSPs, they have no other tax-free savings accounts, no other bank savings accounts. All they own jointly together is this $1 million home. They have an adult son that they would like to have inherit the house when they pass away, and they have no other beneficiaries. The son is also the executor of their estate. When the second member of the couple passes away, the son, who's the executor, will go to the provincial court and apply for what's called letters probate, or initiate the probate process. And the probate process is a process that's run by the court to basically verify that the final will and testament that's presented by the executor is in fact the final will and testament of the deceased, and gives the authority to that executor to go ahead and execute the wishes of the deceased in the will. And that process is there as a protection mechanism for executors. In the example that I'm talking about right now, it's very simple. There's a single asset. The executor is also the beneficiary. But in many cases, estates are very complicated. They have many, many beneficiaries. So the probate process is there as a protection mechanism for the executor as well as the beneficiaries to make sure that the will that's being used and is being executed against is in fact the final will, that all the beneficiaries have been identified. It protects basically someone down the road kind of coming out and saying, hey, I have a different will and I'm also a beneficiary. It's a very important process. And oftentimes when people say the word probate, what they're referring to actually is the estate administration tax. So there's a one-time administration charge that is payable. It goes along with the probate application that's submitted by the executor, the son in this case. And that probate fee, or that estate administration tax, is 1.5% of the value of the estate in Ontario, the amount that exceeds $50,000. So in this case, for the $1 million home that forms the entirety of the second member of the mom and dad couple that's passed away, of their estate, the estate administration tax would be $950,000 times 1.5%, or $14,250 is going to be the one-time estate administration tax that the executor, the son in this case, would need to come up with and submit along with his probate filing in order to execute the wishes in the will. And once that's done, then the son now has the authority of the court to settle mom and dad's final affairs. There'll be some tax filings that need to be done. There'll need to be a clearance certificate that's obtained. But all these are sort of administrative steps. In terms of taxes specifically owing on the home itself, there's nothing else to be done here. There's that home is free and clear. Once those final steps that I just mentioned have been completed, the executor can distribute that asset to himself. He can work with his lawyers to have that asset retitled and placed in his name if he wants to continue to own that home. So when I explained this to the person I was speaking with this week about it, they were like, wow, I'm surprised. I thought there was going to be this massive tax bill. If I own $1 million home, I might have a multi-$100,000 tax bill to be paid. And they were wondering, like, how is it that this information could be so confused? I think there's a couple reasons for it. In this case, the home that's being passed down is a primary residence. So the home would qualify for the principal residence exemption. It would not be subject to taxes, even if the value of the home had increased significantly since the time that mom and dad had purchased it. But let's say we change the example. If mom and dad also, in addition to their primary residence, also owned a cottage, they would have to choose which property they wanted to use their principal residence exemption to shelter from taxes. The second property may be subject to capital gains taxes if it had gone up in value in time between when they purchased it and when they passed away. So that would be a tax that's owing. There would be taxes also owing on the final balances of RSPs or RIFs that had to be paid out to beneficiaries the moment before the second of mom and dad pass away. That's fully taxed as income in the year that the second member of that couple passes away. So people might be confusing those taxes with inheritance taxes, but those are just simple income taxes. There might also be non-registered accounts. So if somebody owns a portfolio of stocks and bonds in a regular taxable account, so not in an RSP, not in a RIF, not in a TFSA, just in a regular taxable account, if there was an unrealized capital gain, there would be capital gains taxes to be paid. But that's no different than anyone who's alive or not alive. There's no difference between those two scenarios. If somebody sells an asset that's gone up in value and it's not in a tax sheltered account, or similarly, if they sell a cottage that is not going to be sheltered by the principal residence exemption, they would have to be paying taxes on that capital gain, or they'd have to be paying taxes on that sale. So this is why I think that sometimes people do get confused about it. I do also think that, the whole process of estate planning and the process of going through creating a will, having an executor settle a will, it just seems sort of like a bit kind of like a murky area or a cloudy area for people. I think there's just sort of a general fear that there's just going to be this huge tax to pay, and everything that can be done should be done to avoid this inheritance tax. But the probate process, which I really quickly went through, it's a fairly straightforward process. It's there for the protection of the executor and the beneficiaries of the estate. And the actual charge for the estate administration tax is really not that large in the grand scheme of things, 1.5% of the value of the estate over $50,000. So on a $1 million home, this couple could pass this home down to their son, and the only charge that they would need to pay, in addition to legal fees and accounting fees in this case, would be this $14,000 roughly estate administration tax. So hopefully this video has been helpful for you. Hopefully knowing some more about probate and the process of probate can help you make better decisions as you plan out your own estate and help you avoid costly mistakes along the way. If you like this video, please give it a thumbs up. Please leave any questions or comments below. Consider subscribing to the channel if you want to get more videos like these. Thanks for watching all the way to the end, and I'll speak with you soon. Take care.